Good evening, everybody. Ladies and gentlemen, dear colleagues, dear students, my name is Harald Bading. I'm Vice Rector for Financial Affairs, and on behalf of WU's Rectors Council, I would like to welcome you to today's WU's event series, WU Matters, WU Talks. This evening is dedicated to the question, the euro is turning 20, what comes next? 2019 appears to be a year of anniversaries. I just learned before that Czech Corona has the 100th anniversary. The euro is turning 20, and even more important for me, of course, WU is turning 100 as well. Specifically on the 21st of October 1919, the former K&K Export Academy was turned into the Hochschule für Welthandel, translated literally the University for World Trade, which then became WU in 1975. WU is celebrating this anniversary the whole year under the heading 100 Years of Research. Thereby we invite the public, that is, we invite all of you to pose questions to WU, and the best of these questions will then be answered by WU faculty members. So far 50 questions have been asked and 21 of them have already been answered, and every week 2 more questions and answers will be posted on the web page. You will find it very easily if you just search for 100 years WU and research. You will get there immediately. Please visit the website. You can ask questions there. You can even upload videos of you, and maybe your question is the one that will be then answered later on. Also today, after this evening, the UTV will be waiting for you in the forum outside to record questions of you if you want. But enough of advertising. Let me get back to today's topic, 20 years of the euro. I'm very happy to welcome 3 distinguished speakers this evening. I would first like to welcome our guest from the Czech Republic, Tomáš Holub, who is the Vice President of the Central Bank of the Czech Republic. Thank you very much for visiting us here at WU. And let me further welcome Chairman Woschengier, who is the Director of the Research Institute for Crypto Economics at WU and the founder of the Blockchain Hub. Thank you very much for joining the discussion. And finally, I would like to welcome Ewald Nowotny, former Professor of Economics at WU and Governor of the Austrian Central Bank. Welcome and thank you very much for your repeated participation in public events on current economic topics at WU. The program for tonight is as follows. Chairman Woschengier will deliver the first keynote speech, then followed by Vice President Tomáš Holub and then Governor Nowotny. The speakers will then join into a discussion first among themselves, and then they will also be ready for questions from the audience. So let's get started. Chairman, please, the floor is yours.
Thank you very much. I do have my speaking. So I have the honor to speak about my research area, which is on crypto economics, blockchain, and tokens. And I won't be speaking much of the euro, but the only anecdote that I have is I was a student at this university. It was a different campus when Austria became a member of the European Union, and I was still a student or already finishing, no, I was in my PhD, when we transitioned to the euro. So I very well remember those days, and it was exciting, and I still believe it's a very exciting project. And especially in these times, facing questions like Brexit, but also other questions. I would like to use this next 15 minutes to address a very novel topic, an underlying technology that has made it easy to create any type of token, which is a cryptographic derivative of any type of asset, access right, or incentive that can be managed by a public infrastructure called blockchain. And in my opinion, this is as revolutionary as the World Wide Web was in the early 90s. We had the internet since the 60s, but most people didn't use it for 2 reasons. Most people didn't have a computer, And when they did, in the early 80s, we had the rise of the PCs. Most people didn't know how to operate command line, so they didn't know how to get information from another computer. When the World Wide Web came, with Tim Berners-Lee creating a standard for easily creating a website with a few lines of code, where you have a visual website that anyone can navigate with a few clicks. This is when the internet became big. And I see huge similarities between the internet and websites and blockchain and tokens. And this is what I would like to focus on today. Whether, how, and how this might affect centralized currencies, the future will show. I think I don't want to say too much about that. So I would like to start by saying Bitcoin is not a currency. And I would like to suggest and ask you all to please never again use the term cryptocurrency. It's highly misleading. Because a lot of these assets that I write, some people use the word crypto asset, which is also misleading because some of these tokens are actually access rights, and they don't represent any physical or digital assets. And why is Bitcoin not a currency? For 3 reasons. It doesn't have a stable value. It's rather a crypto commodity. It has no stability mechanisms. For now, this will change soon. The operating system, the payment network, is not really scalable. However, that will change soon, so this is just a matter of time. And it is not fungible. The token is not fungible because Bitcoin, as opposed to common misconception, is not anonymous at all. It is pseudonymous, but if you run enough big data and if you have a person of interest, you can figure out who the owner behind a Bitcoin address is, which means that you can blacklist certain addresses. This has happened, and many people cannot use their Bitcoins anymore because they had interactions with blacklisted addresses, which makes the token non-fungible. This is why it's not a currency like fiat currency managed by a central bank, but it does certainly have similarities to certain currencies. First and foremost, I would say commodity currencies of the past that we've had. But Bitcoin is more than just the token. Bitcoin can be explained with many, many words. I would like to throw a few out there. The Bitcoin is a peer-to-peer payment network where you can have peer-to-peer payment of the native token of that network, which is called Bitcoin. Therefore, it is an operating system for a new type of economy. I will explain that in the next slide, what I mean by that. It's a transparent and distributed bookkeeping tool and a peer-to-peer payment network as such. It's an incentive machine. I will explain that in the next word. It's a governance machine. It's a transnational governance machine. In fact, it's a governance layer for that next generation internet that many people refer to the Web 3, or also the decentralized web. And the token of that network, the Bitcoin token, is in fact a new type of asset class. And this technology is the backbone of the next generation internet. And if you think of the Web 2 as the front-end revolution that changed the nature, like made websites easier, more accessible on mobile phones, blockchain is kind of the revolution in the back end of the internet. It changes our data structure. It brings us a universal state of data where everyone has access to the same level of information, the shared ledger of transaction. What do I mean by a new operating system for a new type of economy? Our economy, or our society, in fact, today works like this. Most of the organizations we live in today, or we're member of, whether it's private organizations or public organizations, they're managed more or less in a top-down manner. Why? Because it's more efficient, especially the larger the organization. These organizations have one legal entity, so we know who's accountable if something goes wrong. The people or the agents within that organization have legal contracts with each other. Why? Because they might have arrangements, but if something goes wrong, you want to know who to sue, right? You want to know how and who to hold accountable. And the organizations with each other create trust by also their relationships are managed by legal contracts. Now, Bitcoin introduced a completely different type of organization, and we call it a decentralized autonomous organization. The Bitcoin payment network, this peer-to-peer payment network, is a distributed organism that grows bigger and slower by the second because it's public and permissionless. Anyone can download the Bitcoin protocol, and the current state of transactions, the ledger that is distributed, and be part of this Bitcoin network. Anyone can choose to become a validator in the Bitcoin network, a validator of transaction, or a miner who creates blocks of transactions, etc. There are different roles, and depending on which role I want, I can download the protocol, I can download the current state of the ledger, I can start contributing to this public infrastructure called the Bitcoin network. The aim is to have peer-to-peer money transfer, not money, but peer-to-peer transfer of the native token called Bitcoin. Now, how do we make sure that in a distributed network of actors who do not know each other, who do not trust each other, who live in different countries, and who have no legal contracts with each other, how do we make sure that the people or the computers the people who own these computers don't manipulate the data on these computers, that they stick to the rules? Well, by incentivizing, and this is what we refer to as crypto economics, Bitcoin is designed in a way, the Bitcoin network assumes that every actor is potentially corrupt. And it's designed in a way that it's prohibitively expensive to cheat the network. And for decades, it was an unresolved problem in open, untrusted networks, public networks, how to achieve consensus of all network actors, truthful consensus over the state of affairs, in the absence of trusted intermediaries. And this is what Bitcoin resolved. And Bitcoin is not only an object of speculation, it's first and foremost a governance machine, and a very, very powerful one. And I'd like the media to start talking about that, because that's the more important aspect of that technology. And the protocol that allows this is very often referred to as the blockchain protocol. So this is a very new type of governance. There is no centralized legal entity. There is no centralized authority that allows you to be part of the network. It's geographically distributed. It's physically distributed, but it's logically centralized. All the governance rules are in the code. They have been predefined, including the so-called monetary policy of the Bitcoin network, how many Bitcoins will be issued over time and under which conditions. Everything is predefined in the code, and the code is automatically enforced when predefined conditions are met. This makes it a very powerful governance machine, because auditing, enforcement, and compliance and enforcement is on the fly. So this is why a lot of industries have started looking at this technology, but they said, let's take this idea of a distributed ledger, and by distributed governance, but let's not make it public. Let's limit it maybe to a federation of banks only, or insurances only, or along a supply chain. And they started working on what we call federated blockchains or private blockchains, where the validators are all known and they have legal contracts with each other. So there's related technologies, but really very, very different. And both have their properties. One is will reduce bureaucracy and increase efficiency, and the public one might be as revolutionary as the internet was itself. So, and very soon, another technology came around, another project. They said, well, peer-to-peer money without banks is a very good idea. Why don't we take the underlying technology, this idea of a blockchain, public ledger of transactions, and build it in a way where we can create any type of value transfer with a few lines of code, and that code is referred to as a smart contract. The smart contract is the business logic or the governance logic, where you can have any type of value transfer, Uber, peer-to-peer, ride-sharing without Uber, peer-to-peer, for example, file sharing without Amazon Web Services, peer-to-peer apartment sharing without Airbnb, or peer-to-peer maybe book selling without Amazon. You could have that with a smart contract on a public infrastructure called Ethereum. And Ethereum did one thing, and that changed a lot. They created a standardized smart contract that they called a token contract. That was a simple standard for creating any type of fungible token, where you could define the properties of the tokens, how many tokens are issued, etc. And they also, the technology made it possible to not only create this token, but also fundraise, peer-to-peer fundraising on a blockchain. I issue my token and you give me another token, for example, Bitcoin, or for example, Ether, and I issue my Sherman token. I can go on the computer today and create a token with a few lines of code. Technologically, that's not a revolution. But the question, what are the governance rules? How many tokens do I issue? Is this token fungible or not fungible? Is anyone interested to buy a token? Why should anyone buy my token? That's a whole different question. And ever since the emergence of Ethereum and those standardized token contracts, we have seen an explosion of projects issuing their own tokens, creating and raising funds peer-to-peer over that public infrastructure. But before I go into the properties of those tokens, I would like to point out that tokens are in fact not a new phenomenon. And for those, in the German language, we don't use the word token that much, but the English language refers to tokens in different contexts. Tokens have referred to shells, that could represent any type of asset, but also casino jetons or other tokens for the coffee machine. Or we're here in Austria, we have this company creating lingerie called Palmas. We have the Palmas tokens. Tokens are also used and have been used in computing for a long time, and these computing tokens refer to as, they represent rights to perform some operation in a computer network. And the more tangible form of such a computer token would be a QR code, or it will be, for example, a tracking code for my parcel that arrives from UPS, for example. What are the properties of those tokens, and why is that important? Well, tokens, first of all, need a substrate. That could be a piece of paper, a QR code, a coin, a shell. They do need a substrate as a medium of exchange. And they need to be issued by some entity that I trust, and that entity needs to a central authority. That entity, first and foremost, also needs to make sure that it's copyright protected in a way. That's really, really hard to copy that token, because if not, anyone can copy a €5 bill, and even worse, a €500 bill. Anyone could copy a QR code for a concert ticket. We want to make sure that people can't do that, and it requires a lot of bureaucracy to make sure that people cannot copy tokens. Now, the special thing about cryptographic tokens on a blockchain, they represented the business logic, the substrate is a smart contract, and the underlying blockchain. Blockchain hereby is the public infrastructure that is tamper-resistant. Anyone can use it. You don't have to pay anything except for minor transaction costs. And you can trust the ledger. And the smart contract embeds the business logic or the governance logic of that token. And however you define that logic depends on you. You could represent any bonus miles through a token. But it costs you much less than what it was cost, I don't know, Austrian Airlines to manage their Miles and More program today, because the infrastructure costs would be much, much lower. And the next part is that this cryptographic token is accessible by any person that has the private key to that token. And that private key is stored and managed in an electronic wallet that is either on your phone or on the computer. And that wallet never contains any tokens. The wallet only contains your public-private key pair, which is a strong cryptographic kind of identity and password management solution, where you identify yourself as the owner of these tokens, and you can sign transactions, you can send tokens from your wallet to somebody else's wallet through that wallet, but the wallet actually never contains the tokens, and I think we should start referring to it as keychains and then wallets, because there is never anything in it. If you lose your private keys, you lose access to your tokens, even though they're still on the ledger. It's like losing your money on the deep end of the sea. Now, these tokens, what can they represent? They can represent anything from an asset, as I said, a private good, a physical good, or a digital good. They can represent anything, also access right tokens, access right to an asset somebody else owns. For example, if you have car sharing, right? You could have a decentralized version of Uber, or, for example, apartment sharing, Airbnb. You could have a token in your mobile phone, a cryptographic token that would function as an access right for the 5 days that you rented your apartment. You could use that token. But we have a third and very interesting aspect of tokens. They're incentive tokens. Bitcoin itself is the best example for an incentive token. Bitcoin is created the moment that if you're a miner in Bitcoin validating transactions, when you bring productive work to the network, perform a productive utility to the network to verify transactions in a truthful manner and keep the network safe, you are rewarded with a token that is minted the moment you prove that you've contributed with work, and this is why we refer to it as proof of work, the mechanism behind it. Now, this idea, so the token doesn't come out of thin air. It represents a productive function for managing, having distributed kind of upkeep of a public infrastructure. And we have a very interesting new phenomenon of tokens that are now minted. We just had a conference on blockchain and the SDGs, and we have 3 projects here that incentivize, if you can prove that you walked instead of taking the car or that you took public transport, based on the type of, CO2 emission reduction, how much CO2 emission you saved, you get a certain number of tokens, of these CO2 tokens, that you can then change for something else. And in fact, we're now, as the Crypto Economics Research Lab, we're doing a applied research project with the city of Vienna. We're creating a CO2 for cultural token. And this will hopefully be, it's just started operational in a test phase beginning of next year. I just want to end this. I just want to give you an outlook. The future is already here. It sounds like science fiction, but these things are already happening. Today, we have over 2,200 publicly traded tokens that are listed on CoinMarketCap. If you go on coinmarketcap.com, it's a public website that lists all publicly traded cryptographic tokens. These tokens could be infrastructure tokens like Bitcoin or Ethereum, native network tokens of public blockchain infrastructure protocols, but a lot of those tokens just represent, for example, a barrel of oil or gold. They're like asset-backed tokens or access rights in a special network. All these tokens, there are different types of tokens out there with many, many different types of functionalities. This is just 3 years into the creation of public or the possibility to create tokens with a few lines of code. Another number is that if you go on the Ethereum main network, it's a public infrastructure, all data is transparent, you can see that we already have over 170,000 token contracts that have been generated on the Ethereum mainnet, not on the testnet, not on other blockchains that are similar to Ethereum, like Neo, etc. There are many other similar blockchains out there. Ethereum only has almost 200,000 tested tokens. That doesn't mean that all of them are operational, but it means that this thing is happening. People are testing this technology, and we might see many more than just 2,200 publicly traded tokens soon. What are these tokens? Are they a new asset class? Well, it very much depends. Some of those tokens represent things that we really know today and we can easily classify, typical securities or assets. Some of the other tokens might have hybrid functions. And they can oscillate between a currency, a commodity, a utility, and a security. And some of the tokens really are hard to classify. I am not going to go into details. I'm over time, I assume. But these tokens can have very, very, very different properties depending on how I design them. Most of the tokens we've seen in the early years of crypto were fungible tokens that you can trade on exchanges. The more interesting are the non-fungible tokens that are tied to your identity, where, for example, they might have an expiry date and they're tied to your identity. In fact, the token that we're developing with the city of Vienna will be based on your identity and it will have a certain expiry date similar to maybe bonus miles, right? So there's a large world out there. If you're interested, I have an upcoming book called The Token Economy. It will be published soon. To finish it with a few trends that I'm seeing right now, and maybe we will hear a bit more. First of all, we're seeing that more and more central banks are looking in tokenizing regular currencies and having just a kind of like an M5, like a representative of the Russian central bank recently at an event here said. It's just a new digital representative for the money we already have. It's just a new derivative. Another trend that we're seeing is because these cryptographic assets, they're easily tradable, but they're not stable. So we cannot use them as money because they don't have price, they have high price volatility. So we are seeing a huge trend in the creation of so-called stable tokens. And that can be a book on itself. And the most interesting part is that the more radical or innovative stable tokens are using central bank mechanisms embedded in the smart contract to regulate the price of the token. Another thing that we're seeing very much right now is tokenized securities. Because in the end, the token is just another representative, a cryptographic token for any type of digital security that we have today. And it's very easy to regulate. Regulators understand what a security is, therefore it is easy to regulate securities or tokenized securities. Another very, very interesting thing, and I think that will bring quite a revolution, is security tokens, which is not the same thing. It's like assets that you can now, where you can create a digital, a tokenized representative, for example, a piece of art, a Picasso. How many people can invest in a Picasso? If you buy it, it costs a few million. Only high net worth individuals can invest in art. We had the first tokenized art piece sold last summer. It was an Andy Warhol piece, which was tokenized into fractions. So this is what we call fractional ownership tokens, and it was easily sold to hundreds of investors. And 40% of that asset was sold off to lower income investors sometimes. So we are creating higher liquidity for assets that didn't have high liquidity because not many people could afford to buy them. And another interesting aspect is real estate. Obviously, in real estate, we have high levels of regulation, but there is still much happening. And fractional ownership of assets that didn't have digital representative, that weren't highly tradable, that's going to be one of the most interesting trends to watch out for if that happens, if that token economy happens. And last but not least, tokens that incentivize behavior. We had a 2-day conference here, many tokens incentivizing CO2 emission reduction, and you would get other goods, like some working like bonus programs, some having internal economies. The future is already here. It might look like science fiction, but we already have all these tokens that are already issued, many of which will fail, because we're in the very, very early stages. Token design, like how do we design these tokens, is actually not an engineering, it's not a technological question. The technology allows us to create a token easily. But how we design them is a socio-economical question. And this is why we created actually the Research Institute for Crypto Economics beginning of last year here. It's interdisciplinary. We have these over 30 researchers from 8 different departments, lawyers, software developers, economists. It's actually a technology that economists should love, because now they have real-time kind of, they have an operating system where they can have a real-time monitoring of, with a lot of data of what happens in that internal economy. So I hope I inspired some thinking of what this future token economy would mean, and whether it will replace the euro, I don't know. I think currencies like the euro will probably need to redefine their role, but I'm quite certain that they will be tokenized at some point, sooner or later. Thank you for your attention.
Good afternoon, ladies and gentlemen, dear colleagues. First, let me thank to the university and to the Central Bank of Austria, Oesterreichische Nationalbank, for having invited me to this nice debate. And of course, it's an honor to be able to contribute at least to a small extent to the celebration of the 20 years anniversary of Euro. Governor Novotný asked me to cover the following questions in my introductory remarks. So basically to give you some overview on what is the current stance on future euro adoption in the Czech Republic in terms of the public opinion, government's policy, as well as the role of the Czech National Bank in this process, and to discuss what would be the economic implications of future euro adoption in our country. And at the end, a question related to possible electronic forms of central bank currencies. What does the Czech National Bank think about possible e-koruna in the future? So let me start with the Czech stance on euro adoption. It was already mentioned that while euro is celebrating its 20 years anniversary, Czech koruna is actually celebrating 100 years in 1919. So it's 5 times more. Because originally Czechoslovak koruna emerged in 1919 after the breakdown of the Habsburg Empire. It took a few more months since the separation of the countries until we created our own Czechoslovak currency. And why I'm mentioning this? It is interesting that more than 10 years ago, then governor of the Czech National Bank, Zdeněk Tuma, gave this statement. The world would not collapse, and neither would the Czech economy if we adopted the euro in 2010. Likewise, nothing dramatic will happen if we do it on the 10th anniversary of the Czech koruna in 2019. At that time, he meant it at least partly as a joke, because it was hard to envisage that euro adoption in the Czech Republic would come as late as in 2019. And it was received almost as a shocking news at that time by the media, that the governor of the Czech National Bank is suggesting such a late date of euro adoption. Yet, 2019 is here. We are celebrating this anniversary of 100 years anniversary of Czechoslovak koruna, And we even do not have any official target date for euro adoption. So it will presumably take some more time before euro becomes our own currency. Why is that? I think the main answer is in these charts. If you look at what the Czech people say in the population polls when asked about their attitude towards euro, because ultimately euro is a political project. You can see from here that the Czech population was never truly enthusiastic about adopting euro, but the opinion was split about 50-50. One half of the population was for euro adoption, not all of them as early as possible, but still there were 50% of supporters, 50% was against. But the situation changed dramatically as regards the public opinion when the euro area sovereign debt crisis started. And you can see that since then the number of people that do not want to adopt euro is clearly greater than the number of people that are supporters. And we have seen some recovery in the support since early 2012, but the process is relatively slow and it may take some more time before the number of supporters again reaches at least 50% for population. And because it's a political project, the political area is a market, in a sense. If there is no demand, there is no supply. So at the moment, the Czech government doesn't have euro adoption as a priority in its program for the coming 4 or now or only 3 years. And therefore, we cannot expect any move forward with this project during their term in office. We sometimes joke that euro adoption is just 5 years ahead of us, but this has been true already for the last 20 years. So it's a kind of moving target. Every time a new government comes, we have a 4-year election term. They say not during our election term, but we will create conditions so that euro can be adopted by the next government. The Czech National Bank plays mainly a technocratic, supportive, analytical role in the whole process. On regular basis, we prepare 2 documents, one which goes to the government for discussion of future euro adoption, and the other one, which is actually here listed first, it is a relatively large analytical material which provides analytical background for the policy document for the government. We tried to make the document more attractive last year, so we provided even some graphical illustrations of the outcomes of the analysis that we carry out. To really summarize it in a very intense way, we actually say that from the purely economic perspective, Czech Republic is ready for euro adoption more than ever before, because we have improved in many respects. You can see that in most analysis we have green colors, which says that the outcome of the analysis is relatively favorable as regards future euro adoption, and the arrows indicate whether the situation is improving, if the arrow is pointing up, if it's stable, or whether it's deteriorating if the arrow goes down. And you can see that we basically see only a few bottlenecks at the moment. One of them is in the fiscal area. We still haven't resolved some long-term fiscal sustainability issues, such as the reform of the pension system and healthcare system to face the challenges of aging population. But this being said, it's at the same time true that the Czech fiscal situation is much more supportive for future euro adoption than it was a decade ago. We have, of course, some differences in comparison with the euro area as regards the structure of our economy, especially in terms of having a higher share of industrial sector in the economy than the euro area average, with a strong focus on the automotive sector. We don't have fully synchronized financial cycle with the euro area, and I think an aspect of the debate which plays a very crucial role in the Czech Republic is the unfinished process of long-term real catching up process of our economy with the level of development of advanced euro area countries, which is illustrated by this chart. The Czech GDP relative to the euro area in purchasing power parity has been increasing. There has been a growing trend. Convergence has resumed since 2013, once we have overcome the double dip recession. And now we are at around 85% of the euro area average, which means that the level of development is higher than for some of the existing euro area countries, but there is certainly scope to converge even further. And a related aspect of the convergence process is the fact that our price level is below the euro area average to an even greater extent than the GDP. It's actually just above 60% of the euro area average. And the wage level in the Czech Republic is still much lower than in the euro area. It's just 40% in euro terms and around 60% in purchasing power parity terms. This means that for the future there is still a lot of scope for real exchange rate appreciation of Czech koruna against euro. And with an independent currency, you basically have the option to proceed through two channels or their combination. You can converge by having an appreciating nominal exchange rate. You can converge by having higher inflation and higher nominal wage growth compared to the euro area, or something in between these two choices. While after adopting euro, the nominal exchange rate appreciation is by definition eliminated, and you can converge only by having somewhat higher inflation than the advanced euro area countries. Why I strengthen this? First of all, Czech public tends to be quite inflation averse. We like really low inflation. Secondly, I think low inflation is the clearest, most visible and measurable benefit of the existence of euro in the last 20 years. You can see that there were only a few countries in Europe that were able to keep low inflation rates during the 1980s and early 90s. But then future euro adoption created a very strong incentive for the countries to disinflate, for those countries that wanted to join. And since then, we can see that Europe is really enjoying price stability. Maybe a little bit too much of it in recent years, because our colleagues from the euro system are fighting with the so-called lowflation problem. But to the extent that we agree that price stability is the primary objective of monetary policy, the job has been done. But at the same time, this is not the selling point of euro in the Czech Republic, because we have similarly low inflation currently as in the euro area. And as I just explained, after joining euro, our inflation could actually go a little bit up compared to the recent past. At the same time, euro hasn't brought any visible benefits in terms of fostering the real long-term economic convergence. There are euro area countries which are catching up, but it's mainly the newcomers to the club, while within the earlier members of the euro area, there is actually even some divergence as a result of the hardships of the southern periphery. So the main selling point is not there. At the same time, we often expect that monetary policy is not delivering just on the primary objective of price stability, but that it also delivers on the secondary objective of helping the economies to smooth the business cycle. And this is more easily done if you have your own independent monetary policy, unless your economy is cyclically very much synchronized with the euro area as a whole. Which in the Czech Republic, actually, we can see that we are synchronized to a large extent. Definitely our business cycle exhibits a strong positive correlation with the euro area, which is quite natural for a small open economy. But at the same time, you can also see from these charts that the synchronization is not perfect. And that's why our own independent monetary policy can bring us some stabilization benefits. Finally, my last remark is on the e-koruna debate. And here I provide you the ratio of Czech cash, so the paper, currency and coins relative to GDP. And you can see an upward trend over the whole data sample, maybe apart from the last year when the figure is broadly stable, and you can see that it is almost 12% of GDP in Czech Republic. So Czech economy is really very much cash-based economy, and it seems that people, in spite of all the financial innovation, Czech people love the physical money. And that's why the Czech National Bank is actually unlikely to be a front runner in experimenting with central bank issued digital currencies. We are definitely watching this topic with great interest, but if you really want to have a central banker speaking on digital currency, you should invite the Swedish colleagues. So e-koruna, it sounds similar because they have the same crown currency as we do, but a completely different situation in terms of the usage of cash. At the same time, Czechs do like experimenting with tokens or crypto assets. We have a relatively high density of Bitcoin ATMs, or I don't know how you call it correctly, but nevertheless, the cash is king in the Czech Republic, and the king has a crown. So let me conclude. I think that it is clear that euro, after its first 20 years, solves all the functions of good money. It's a unit of account, generally accepted means of transaction and a store of value, and the second most important currency around the world in terms of foreign reserve management and stuff like that. And this is thanks to the fact that euro system, including your Oesterreichische Nationalbank, has delivered on the primary objective of monetary policy, which is price stability. So we should congratulate to all those participants in the projects that live happily in the euro area. But at the same time, this price stability has been also achieved in the Czech Republic, and in fact, euro adoption can lead to some small increase in Czech inflation for the future, due to the catching up process, and that's why this main selling point is absent in our case, and also we cannot see a clear dividend for euro adoption in terms of higher or faster convergence of GDP levels or faster economic growth. It is at the same time true that the recent crisis has uncovered some institutional deficiencies in the project of the euro area. And so far, the Czech cautious attitude is to wait until those institutional reforms are finished to be able to see what kind of club we are joining before taking the decision. And at the same time, it is also true that the secondary objective of monetary policy is more easily achieved with an independent monetary policy. And that's why we, for the moment, are one of the happy outs, staying outside of the euro area. But at the same time, I would agree with the first speaker that euro is not at least currently put at threat by the so-called cryptocurrencies, because they are not really currencies, they are crypto assets or tokens. And none of them meets the three good properties of money like euro does. So thank you for your attention and thank you for the invitation.
So, dear colleagues, we have heard, I think, two very interesting presentations, so also very different presentations, and I'll try to make some comments on both of them. If I may start with my Czech friend, I think we have, especially for economists, the very interesting situation that this is one of the few cases where we have very interesting real-life experiment. Because we have two neighboring countries, Czech Republic and Slovakia, with the same tradition, with rather similar economic basis. One has an independent currency, and Slovakia is part of the Eurozone. If you look at the economic development, and you have seen a slide over there, Slovakia had a bit of a higher growth rate, but that may be due that the basis of GDP in Slovakia was lower than in the Czech Republic. So we could say the currency as such doesn't play such a big role for an individual country. Because for the growth of an individual country, there are many other aspects. This is the economic structure, this is the political stability, this is the demographic, and so on and so on. Of course, if you look at it from a pan-European perspective, I think things look a bit different. Because in that sense, of course, the euro is a public good that has to be seen in the context of the single European market. And it's quite obvious that a single market is functioning better if it has a single currency. And of course, then you can have strategies of, if I say so, free riding next to this big single market. But of course, if everybody does it, the single market would break down. So in that sense, I think we have an interest that each member of the EU, and this is even an obligation for most of them, is or will become a member of the Eurozone. And in fact, the Eurozone has been expanding in the last years. For the Eurozone as such, looking at the last 20 years, I think the big progress is first that it is the economic part of it, as the equivalent to the single European market, and especially for a small country. Of course, being a member of a functioning single European market is essential. Austria is one of the big winners of both of EU integration and of the euro, because for a small country, of course, it is much more important to have full access to this market. I think what was very important for the euro also was that in the time of crisis, being a member of the Eurozone has been a very important element of security. And I have had my own experience in this. For the banking system, in a time of crisis, the most relevant aspect is access to liquidity. And this access to liquidity was provided by the European Central Bank. But of course, it was also access to liquidity in foreign currency. Like we had a dollar shortage. Banks that had exposure to dollar, but they didn't get dollar because there was no dollar market. And in this case, it was positive that the big central banks, ECB and Federal Reserve, created a system of swap arrangements, which is, I think, one of the most important innovations that we developed in the crisis, because it means that if there is, let's say, a dollar shortage, the ECB has access to dollar liquidity via this swap arrangement. The Austrian Central Bank or even the German Central Bank, smaller central, never would have had a chance to get this kind of swap arrangement. And of course, the Czech Republic got a chance because the liquidity provision was provided by the Austrian banks there. And it was the duty of the Austrian Central Bank to take care of the liquidity in these cases. So I think it is a very interesting comparison. If I now may make some short remarks with regards to the future and to future perspectives. And I think with regard to future perspectives, we see on the one hand that there is, of course, the role of a currency to provide the typical elements, price stability, to be a means of payment. And this, in this case, in this way, the role of the euro as such will not change because it is fulfilling the functions. There is another aspect for monetary policy, and that is the aspect of the distribution of your currency. That means payment systems. And in fact, payment systems, this is where we undergo huge technological change. And I have to say, our discussions that we have in Frankfurt at the ECB, frankly speaking, are not about Bitcoin or so, because as it was said, this is no currency. But it's about new payment systems. And the question in this case is, who will control these payment systems? And the data, the huge amounts of data that go with it. And will it be controlled by American or Chinese providers? And you've just seen Apple Pay, for instance, or Chinese providers. Will we have some European data systems? The ECB is trying to provide such a system. And the question is it perhaps too late? Because, of course, this is, it's quite obvious, this is a field where the bigger you are, the more efficient you can work. So it's not an easy way for newcomers to get into this. And the third aspect, and this is what I want to share with you a bit, is, of course, a central bank is a public institution. So we, of course, have to know what is the interest of the public, what is the behavior of the public. And so some of our contributors made a survey, and one of the main authors, Mrs. Ritzberger, is here with us, our chief economist, about some empirical testing of the use and acceptance of new forms of banking products. Of course, all now related to Austria. And what you see is, of course, that we have very, very different differences between Austrians as such and age 18 and 35. So that means the age in which, of course, I would say 99% of the students of the Vienna University of Economics are to be seen. And so you have to be aware that if you talk to your friends, this is a different group than it is the old Austrian group. So you see this already in the use of online banking, but it is pretty high in Austria already, with 58%. But of course, age 18 to 35, it is much higher. And what is quite interesting is the share of respondents visiting a bank desk at most one time a year. So this is for those who don't go to a bank de facto, about a third of Austrians, which is quite high, and 51% of this age group, which means, for instance, a revolution for the banks, because if you have kind of the way, what is your distribution system? What is a bank office, so the bank on the street? Do we need it? And in fact, we have seen this rapid decline in this kind. The same is, of course, especially with online banking, that you see, and this is again one element which is quite relevant. As I said before, 58% of Austrian population. We have this very high percentage with high school diploma. So this is now your group that you have. Clearly slower with no high school diploma, and much lower with age 66 and over. And this is one element that we have to think about. It's not only about technology. It's also about the society and the divisions within the society. Divisions between well-educated and less well-educated, between elderly and younger one. And I think this is for the central bank, as we are not a startup wanting to make business in one small sector. We have to deal with the whole society. This is something that we are taking quite serious. You won't see this from behind, but of course it's also that one has to see we have very different elements of financial services. So let's say these mobile apps for financial services, like for instance, George for Erste Bank or N26 and so on. This is something where 21 use it actively, 21%. 34 at least are aware of it, and the green is they're not even aware of it. So this is clearly the one thing that is accepted, at least by a larger part. There are a long list of things, and where you read a lot about it, but they're not used. So you see, crowd investing is a nice thing, but it's a minority game. Robo-advice, I think it's not even a nice thing, but it is, again, a minority game. So one has to see what is kind of maybe very far in the future, but what are things that might come, and that means, of course, these new financial services. This is something that is of relevance for us. We have been talking about cash, like we have the same tradition, like our Czech friends, Austrians love cash. And again, here is the perspective, cash should remain as important as it is now. This is the role of about 70% of Austrians. Age 66 and over, it's 93%. Age 18 to it's 43. So all loved cash, but in different ways. And again, this is something for instance, also the central bank as provider of cash has to be aware if we have to think in longer perspectives. With regard to crypto assets, there is interest. There is interest in it, but it is a kind of theoretical interest, and some have heard about it, but hardly anyone is really engaged. If you look at the whole population, if you would ask about it here at the Vienna University of Economics, I think the answer would be a bit different. With the crypto assets and blockchains, this is more or less, I think, a repetition of what has been said in the first presentation. So just to end, I think the fascinating situation we are in now with the euro at 20 is that I think the technical sides of the euro has been mastered. The role of the ECB has been stronger now, because ECB now is not only relevant for monetary policy, it's for financial stability, and since some year, ECB is also responsible for banking supervision of the European banks. So I think this is a success story. But of course, what we see is, and this is that it is a field where there has been a long stability of technology. So let's say a savings banks at 1900 was not so different from a savings bank in 1950. But the savings banks in, let's say, 2040 will definitely be a lot different from the savings banks that we have in 2010. And this is a challenge we have to master. I think it is, and we have to be aware that we should master it in a way that is really beneficial for large segments of the population, so that this does not become an element of dividing the society, but that we take care that we make sure that these vital services, and financial services are vital services, that they are available to de facto all of this society. And I have to say, if I think about financial innovations, the one financial innovation I love best is the innovation, and as a central banker, one shouldn't mention one single bank, but in this case I have to do it. This is what Erste Bank did with the so-called Zweite Bank, that they had a special bank for kind of non-bankable persons. I think this is a real progress that has effects for the society. We have to observe the rest, but I think for the rest we have to be very careful that we are able to see this in advance. And so I'm very glad, and as somebody who comes from the WU, I'm also proud that WU is a forerunner in these kind of things, and I'm very glad that you have this institute, and that, as I've just heard today, that you're working with the city of Vienna exactly to bring about, to use these new perspectives also for, let's say, socially interesting perspectives. Thank you for that, and thank you for being with us. Thank you.
Yeah, thank you very much for this really interesting presentation. We are running a bit out of time, but of course I want to give you the opportunity to ask questions. So I will make the panel discussion very short, but give each of you the opportunity to respond to the other presentations if you want. Let me just start by quoting two remarks from the second and the third presentation. The one, the euro is better than any crypto asset, even for happy outs. And the other one is, it's about payment systems, not about cryptocurrencies. Sherman, do you agree?
The first one, It depends on the time perspective. Today, yes. In 5 or 10 years, I don't think so. I think with what we're seeing already happening around what I mentioned, stable tokens, if we have a few trends trying to create stability, artificial stability of a token with very interesting mechanisms that come from actually macroeconomics. They take mechanisms from central bank tools, central banking tools to stabilize a currency are not now used in a smart contract. I think if that is successful, that could be a potential global currency that is stable. But it's not only stability, another one is the fungibility aspect. We are seeing, as I said, Bitcoin is not fungible, but newer alternative cryptocurrencies are working with alternative cryptographic tools that are privacy preserving. And there is a lot of research going on here, like Monero, Zcash, etc., using alternative ring signatures, zero knowledge proofs. I'm using maybe words that many people don't understand, but these are technologies that have existed. It's not new technology, but applied in the context of blockchains and tokens, it might give us the level of fungibility that currencies need. And what you mentioned, the scalability, right now public blockchains, they don't have a lot of scalability, so we can't use them really for money, but this is also being resolved. And for those who are a bit older and remember the early days of the internet, I remember the time where I was taking a cable through the house and plugging it to my computer, and the speed was 28K. And I was very, very happy when 56K came, and now we have high bandwidth mobile internet access. And on a time perspective, what is technologically possible today with blockchain is not necessarily indicative of what is possible in 5 or 10 years, and that applies also to adoption rate. When it comes to your second question, you said, like I fully agree with you, the infrastructure is very interesting as a settlement layer. And the question, and here I agree, but I think the tokens, depending on what I said before, could be complementary technologies or complementary currencies, potentially international currencies. However, I don't think that national currencies will fade. I think they will have competition and lose their monopoly, their local monopoly, potentially. Yeah.
Thank you very much. National currencies, even international ones, may be losing their monopoly. Would you agree, Mr. Governor?
Well, first I think we all have learned that we should be very careful with looking to the future too far. It's important, but not in the way of really making a forecast. So given this, cautiously, I would not agree. Because I think at the end of the day, a currency is based on the trust that you have somebody, and this somebody is a central bank, that is controlling it, and that therefore gives the stability. And there is, of course, and this is a bit, I think, some of the appeal of these ideas, that there's a kind of anarchistic element, so that there is no, and you have had it in one of your slides, nobody controlling it and so on. But this is about trust. And so therefore, there will always be an element, and so historically, we always have seen that the trust in a currency, it has to be based on a strong economy, and a strong economy has to have a central bank that is controlling it. The role of the dollar is, of course, based on that the US is the strongest economy worldwide. We can expect that the Chinese currency will get stronger because it is something, it also will become stronger. It is not fully convertible now, but it might come. The euro is today the second most important currency worldwide. This is reflecting the role of euro. I think you cannot see this only as a technical aspect. It has to be seen in the context of economic credibility, because at the end of the day you want to buy something with this, and there has to be some real element behind it. So therefore, I think that where there might be a lot of technological progress, this is with payment systems, but payments in real currency.
Something to add, Mr. Vice President?
Well, I would agree, because my point about this comparison between euro and crypto assets was based on the fact that we have quite high expectations of our currencies. I tried to point out to it during my presentation. We don't want just something that allows you to do payment transactions quickly. We want also something that has very stable value in terms of the basket of goods that we are normally using. We like prices to be sticky in that thing. We don't want them to change every day very frequently. And on top of all of that, we want monetary policy which runs the currency to be helping the economy to smooth the business cycle. And so far, none of the crypto assets is designed in a way that it would simultaneously meet all those demands that we have on regular central bank run currencies. So for that reason, I don't think it's a good, maybe an interesting complement. I agree that the technology will evolve. The use will be much broader than the so-called cryptocurrencies, but I don't think it's a real competitor, a real threat to the currencies as we know them at the moment. Maybe it will be in the future, but not now.
Thank you very much. Yeah, it's an interesting question how this will evolve. And what I also find interesting is the forces behind, because here we are talking about technology maybe in the far future leading to an abolishment of the state monopoly essentially in printing money essentially. That's not a completely new idea. There are economists, the only one Austrian Nobel Prize winning economists who actually wanted to deliberately abolish the state monopoly for printing money, having different currencies, means of payments, which are in competition with each other. So these ideas are around, and it would probably also be interesting to combine this in the research projects, these economics ideas with these technological forces, which might have such a result in the end.
But you do know that Bitcoin was based, so in the Bitcoin white paper, Hayek is cited.
Okay.
Yes. So Austrian economics is actually the ideological basis of Bitcoin.
This is exactly why it's so dangerous. Because you have to be aware, this Hayek idea is based on a total ignorance, and they want to be ignorant about macroeconomics. It's all kind of micro markets. And this was what he preached in the 1930s. But as we had to learn, and we had to learn it the hard way, is that there are such things as inflation. There is such a thing as unemployment. And this is macroeconomics. And this you never can do with such a kind of competition of currencies. So there has to be somebody who uses this monetary policy as an element of macroeconomics. This is what Hayek totally ignores, and therefore I think that it is, let's say, as a theoretical construct, it might be appealing, but for economic policy, it's hugely misleading.
From your perspective of today, it may, I agree, right? But I didn't have time to actually go in, and I would like to mention that because it's important and maybe the younger audience can relate to it. I showed you how many tokens that are fungible, that are being publicly traded, we already have. And this is just the beginning, it's the first years, right? Now imagine you have a mobile wallet. We have mobile wallets where we can manage those tokens. And you have thousands of different tokens that you own, some of which are tradable, right? We Currently, in order to trade tokens, cryptographic tokens, I have to go to an online exchange. It's a third-party service provider. And I sell, for example, my Bitcoin, and then based on the market price, I get Ether or any other token that I might want to buy, minus the transaction fees. So I need centralized third parties to do that today. But we already have the first standards that are working on wallet-to-wallet, what we call atomic swaps, where I don't need centralized exchanges anymore and order books. Combined with algorithmic trading, the price, I can swap my Ether for your Bitcoin based on a public price without the need of centralized exchanges. And this is why I showed you that we're already going towards the trend of tokenizing art, tokenizing real estate, tokenizing anything, maybe even CO2 emission reduction. And for all those tokens that are fungible and tradable as such, when I can atomic swap them wallet to wallet, what does that mean for money as a medium of exchange? Until today, we need money as a medium of exchange. We do need that because it's the engine of a frictionless economy. But in a future where that becomes a reality, the question is, what is the role of such centralized money? I don't know it, but I do know, I'm quite certain that certain things will change because the conditions have changed, right?
But all your examples have been microeconomics. But what is, for instance, the situation as we have had in the crisis? There was a liquidity crisis. Somebody was there that had to provide liquidity. This is not something that is done by individual agents on the markets. This is something where you have to have economic policy agents, and this is in this case the central bank. So I think this is exactly what I wanted to show. We are not living in a world that is only dominated by perfectly functioning markets. We are living in a world where we have many cases of market imperfections, where we have economic crisis, where we have over-liquidity, where we have under-liquidity, where we need to have some regulation of this. And this is I think if I want to buy an apple, or if not a computer, but an apple to eat, so that is fine. I think this we can do, but this is only part of the life. The easier part, the more important part, is the macroeconomic part.
This is why we have our research institute to research that in the future.
And I wish the best for that.
Yes.
Okay, I think we could dig deeper into this field of conflict, but as I said, questions, please, and I suggest we collect 2 or 3 questions at a time, and please be concise and ask precise questions, maybe addressed directly to one of the 3 speakers. Here, the lady, please.
My name is Andrea Hofer from the International Division of the Austrian Central Bank. I would like to put forward the following question. The situation would change completely if the central bank decides to issue crypto assets. Then they would be part of the monetary aggregate. Do you see the future for this?
Yeah, this is what I wanted to indicate a bit. And there, because somebody mentioned the Swedish central bank, this is what the Swedish central bank, for instance, is talking about. Is that they, you see, we have today, we have cash as one element of money, we have book money, and then that would be a third way, this kind of digital money, but it would still be real money. That means Swedish kroner or something like this. And this, I think, is something that might be of interest. For in Sweden, they discuss it because Sweden is a vast country where it is rather difficult, let's say, to provide cash everywhere. And this could lead, indeed, to very substantial changes in monetary policy. Because now an individual person, individual company, has no direct access to the central bank. It's all via, either it's cash, so this is direct, otherwise it's via banks. if each individual would have access to a central bank, that would be a very different world. And the question is, what is the function of banks in such a system? So, in some way, it would make perhaps life easier for central banks, because you can have direct access to consumption and decisions. On the other hand, it's only easier if you want to have expansionary policy. If you have to want restrictive policy, it will be more difficult, because then you have to take an amount out of the account of an individual. So this as a third element of money, but of central bank money. This is a discussion we do have, which is where there are no solutions, but I think that is an interesting discussion.
If I may add.
Yes, there is no question around, so please add shortly.
I think it's very important to really study this topic and to get better understanding, not just the implications for monetary policy, but also for financial stability, because you create a very close substitute to bank deposits in the central bank. And I think you want to make sure that if there is some crisis of confidence, money does not flow in huge amounts from banks to the central bank balance sheet, that you don't create a new form of bank runs, because we have done a lot to avoid bank runs, like deposit insurance and stuff like that. And so we also need to think very carefully about this aspect.
Yeah, okay.
Just two short questions. One on to Miss Professor Wojcimgier. You made me curious about these CO2 tokens, because at least what I thought is that these particularly bitcoins have a problem with the use of energy and the use of. I mean, I think they use an amount of the whole Austrian or at least Danish consumption of energy just to produce these tokens or whatever, these coins, whatever you might call them. It's a kind of a contradiction. So how could they really contribute to improve the CO2 emission problem if they are part of the problem themselves?
Yes, this is a valid question. However, I would like to say that first of all, the energy costly proof of work process, the consensus mechanism that allows us to have this peer-to-peer payment network, that is true. But we know exactly what the CO2 footprint of one Bitcoin transaction is. Why? Because everything on the blockchain is transparent. We have on-the-fly real data, on-the-fly auditing and of everything that happens. We don't really have exact data, and in fact we're conducting a study of what is the CO2 footprint of a banking transaction, and banking transactions have different CO2 footprints, because how many banks are in between, how a Visa transaction and a PayPal transaction, depending from where to where you send it, you have different footprints. We don't have the data on that, so we cannot really compare what the impact is of this current new system vis-a-vis the old system, and for us right now it's hard to make this comparison. So while what you're saying is true, what are we comparing it to? This is the first thing. It is in particular Bitcoin and the consensus mechanism behind Bitcoin that is so energy intense. Alternative blockchains with alternative consensus mechanisms are far less energy intense. So we have to be careful which technology, because like in Vienna, we would use a federated blockchain which does not have the same CO2 footprint, right? That's one thing. And another thing is that even in the case of Bitcoin, the community is working on scalability solutions. Right now in Bitcoin we have 3 to 7 transactions per second. Or once the Lightning Network is activated on the mainnet, there will be hundreds and thousands of transactions. So what is currently a very bad CO2 footprint and very high transaction costs will change rapidly once the second layer solutions bringing higher scalability will be here, and it's been deployed on the testnet, which means that it will be soon live on the mainnet. So this is true what you're saying, but we have to be, the media is very often they have only one line to catch your attention, and then the reality is far more complex. But it is true that if we would use Bitcoin today as a public infrastructure to incentivize CO2 emission reduction, we of course have to calculate the negative impact that the Bitcoin infrastructure has itself, right? But in those use cases, we wouldn't even use Bitcoin, we would use other type of infrastructure. And Bitcoin is a very good example for the discussion around public goods, right? You said money is a public good. And the Bitcoin network has created a new mechanism to create a public good, but collectively. Yeah. And yes, we have still many problems, scalability, privacy, CO2 footprint, but it is fascinating that we have found a mechanism where we collectively create a public good in the absence of too many centralized parties. There is a point of centralization, it's a code, and people have to agree on what the code says. And so it's not fully decentralized in the end, it's a myth, right? We will have governance, and the issues of governance are a question. So I hope I answered at least that part of your question, yeah?
Thank you. So, please.
Okay, thank you very much. One comment, one question. One comment, very interesting debate, but I hope you can connect more on research, because obviously in the debate, cryptocurrencies or blockchain and central banking at the moment doesn't seem to harmonize a lot, maybe, as you say, in the future and in research. But the title actually says, the year is 2020, what comes next? And I don't think cryptocurrencies comes next. And my question is actually to Mr. Holub, as he's a happy outsider of the Euro club. And it's more on what is next. And, you know, the big debate is on macroeconomic situations. For example, Italy is, you know, what's next for the euro? Is there another big 2012, 2011, with the ECB having used a lot of its instruments, and some people say that actually at the end of the rope, if there's another crisis, who will act if it's not the ECB, because the countries will not politically be able to respond quickly. So Mr. Holub, do you think the central banks or the ECB will be able to intervene in the next crisis, or is that one of the reasons why you're also happy to stay out, because you don't know and you'd rather be independent of that?
Well, this is a difficult question. I'm not sure if I shouldn't allow Mr. Novotny to answer it, because he's the insider.
We will do it together.
Well, of course, ECB is now for me in a relatively challenging situation, because there are signs of economic slowdown, inflation expectations after the long period of very low inflation are still probably not very well anchored to the ECB's price stability objective, and the interest rates are still in negative territory. And you may of course ask what the ECB is going to do. In general, the toolbox of central banks is very large. Those institutions can do really a lot, and the fact that we didn't do more during the previous crisis was partly due to self-imposed mental constraints. But in principle, central banks can come up with new inventive tools to boost the economy and inflation expectations in the downturn. But of course, it is more challenging if you start a potential downturn at negative interest rates. From that point of view, Czech Republic actually has an advantage, because we were able to at least partially normalize our monetary policy. the key policy rate is 1.75, so it's not a huge room to ease if it's needed, but we have at least a little bit more than the ECB of the conventional room before we would be forced to think about another round of unconventional tools. And this, for me, this is another sign that the autonomy of monetary policy has some benefits for the Czech Republic.
Okay, thank you very much. In light of the time, I think I have to close this official part now. I said official part because there is a reception now. The Austrian Central Bank invites for a buffet reception. Thank you very much. So real food, real drinks, not tokenized. There is no free lunch, but sometimes there is a free dinner. Enjoy, you have deserved. Thanks for coming and hope to see you again soon.